Hey everybody, welcome back to another live stream. Before we get into the show, which will begin in a moment, I wanted to let you know that if you have any questions throughout the stream, remember you can always ask them on our website. We have a live chat support ready and able to help you. My team there is available if you have any questions about any of our products, services, or just have a question for fun. Check it out. Link will be down below in the description.
The stream will be starting shortly, but while you wait, you can check out our sponsors 8cap, Forex Tester, and Superfunded. You can find the links to them down in the description below.
Coming to you live from our studio in Atlanta, Georgia, this is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
One for you today because, and there goes one of my lights. I guess I'll just move this guy. We've got a really important one today. We've got CPI, but we also have FOMC meeting minutes happening later. There goes both of my lights. Got FOMC meeting minutes happening later on today, but glad you guys could make it here this morning to watch the CPI news event with us today. I'm going to keep this really brief so that we can go ahead and get a little bit of chart analysis in before the news. I'm just going to look at our top three biggest movers to the upside and the downside so far today here in the market heat map part of the Edge Finder. So those top three movers to the upside right now are Aussie CAD, Euro Pound, and Aussie NZD. Aussie CAD, the biggest mover so far, up 0.14% on the day there. And then down here towards the bottom, our biggest movers to the downside are the Pound Aussie, Pound CHF, and CAD CHF. So our biggest mover to the upside and the downside are both Australian dollar crosses. So it looks like the Australian dollar making a little bit of moves here in the early markets. But yeah, I want to thank our three sponsors, 8cap, Forex Tested, and Superfunded, for sponsoring today's stream. You can find more about them in the links down in the description below. So go check those out. But with that, let's go ahead and jump into the markets with Nick ahead of this big CPI news event.
All right, and good morning, everybody. Welcome back to another live stream. Thank you, James, for that introduction. Behind the scenes here, we are getting ready for a very big day, and you guys should be too, as today's news events, they don't seem to stop. And not only do they not seem to stop, look how many there are of them. Here is your red folders on the day, guys. And we've got, by the way, we've got about 7 minutes until the CPI number reports, which of course is a very big deal. In many cases, the CPI number is in some ways lagging of an inflation measurement. However, it's something that the Federal Reserve pays very much attention to. And if they pay attention to it, the market really cares, right? Because if the market is watching the Fed and the Fed is watching the CPI, hey, the market cares about CPI. It's kind of, that's like, what is that? Like 8th grade math, right? A equals B equals C, then A equals C, right? Whatever that concept is. Anyways, I'm surprised I remember that. I didn't remember much from school. I'm kidding. But anyways, taking a look at the CPI here forecast for today, we are expecting 0.2% month over month and coming down to 5.1%. And guys, this is a significant drop from where we have been in the previous reporting. We also saw 6%. Now, the market is sort of expecting 5.1% to print here today. Why is that? Well, again, there have been substantial slows in the employment department. Still a healthy jobs market, but a significant slow from the numbers we used to be putting up, which is a large contributor to inflation, of course. Core CPI is expected to come out at 0.4% month over month, and we will, of course, report on all of these numbers as we go into the event, as these are sort of your big ones here for this morning. But guys, I want to encourage you real quick. If you are joining with me here live, make sure to do yourself a favor here and do the channel a favor. Subscribe to the channel and also hit the notification bell because, guys, we are likely to come back later for some of these events. Specifically, I think I would like to come back and live stream for the Fed meeting minutes, as that is also a major market news event, which we will be covering here on the channel. So make sure to subscribe, hit the notification bell so that you get notified when we come back live here this afternoon. So, guys, we have got about 5 minutes here prior to the news coming out with the CPI numbers. I'll show you guys just a quick update. I'm not going to spend too much time on GJ as it is not super impacted by the volatility here today, at least not in usual cases, though it still will be. All markets pay close attention to key economic figures from the United States, as the U.S. is, of course, such a integral part of the global economy. Anyways, still floating this profit here. In fact, we're pulling back here this morning. If we're able to put in some sort of low here, if we're putting in a higher low, like if this market sort of catches a bid yet again, I will look to trail stops. And this is really weird to me. I think TradingView is messing up. Why is this profit saying 26,000? This is definitely an error. TradingView support, if you're watching the streams, I doubt you would be. But if you were, that seems like a really weird error, because I know that profit is trailed at like nowhere near $27,000 in trailing profits. Would be nice. I'd be very happy about that if that was the case, but it is not the case. So I'm not sure what's going on there. Let's take a look at some markets, guys. Again, we've got just a couple minutes here before the event. Taking a look at gold, I am bullish on gold. And so watching today's price action, I don't have any trades open currently, but I'm watching for pullbacks here today. A nice pop during the Asian session last night. Gold got a little bit of a rally here. You could see last night, again, for me, an Asian session for those of you guys watching. We had a big pop on the gold market, and it looked like we were possibly even going to run back to the highs. I still think we do head back to the highs, 2032. We'll see if I'm correct about that. Again, a heavy impact will be placed on this CPI number as it comes out to the gold market. In terms of price action, this is a 4-hour chart. This chart looks really good to the upside, in my personal opinion. You've got a nice overall market uptrend here going on. And in my personal opinion, pullbacks on this thing actually look like buying opportunities. So if I'm looking at this and saying, well, where do I want to get long? My opinion would be, if we do get a dip here today, I might actually be interested in potentially picking up gold on the long side, possibly a retest of 1985, which is our previous low. But honestly, even just a retest of 2000 after this break looks attractive to me. So I think that there may still be worth a risk here, in my opinion, possible longs if we do retest areas around 2000. So if that does occur today, I may have an opportunity to re-enter my gold trade. I made some money on the way up here. I was able to catch from around here and trailed out of my trade around here. So not a huge profit, but we saw a little bit of that profit get wiped away, but still we walked away with money, which is, hey, money is money. And you can't complain there. So anyways, we've got 1 minute here to go, guys. Things are again expected to be very volatile with the CPI numbers. What I'm going to do is I'm going to pull up the charts, but don't go anywhere after the news. We're going to cover the event. We're going to cover why the spike, whether up or down, makes sense, and then we're going to talk about possible trade setups. So stick with us. So what I'm going to do now, guys, is I'm going to set up my charts here to watch the event. I just like to keep an eye. I think it's kind of fun just to keep an eye on all the charts. We're going to put gold in the top left, guys. We're going to put the euro. Actually, let's put the S&P 500 in the bottom left here. So we'll do that. So S&P 500 is on the bottom left. If we take a look at, we're going to put in the top right, we'll put the euro USD. And we've got the pound USD. And by the way, guys, these are 15-minute charts. I like to use the 15-minute chart. I think it makes the spike a little bit more fun to watch. Anyways, guys, we've got about 20 seconds here. We're going to be covering the CPI. Again, do not leave after the spike. After the spike is when things actually get interesting, and I think that there's trades to be taken. I don't trade before. I don't trade the actual spike. I think that is pure gambling because, again, the spreads get just terrible. So please be very careful. Anyways, we're about to go into the CPI news event. Let's see what the number prints here this morning for us. CPI April 2023. All right, and the S&P 500 is up here on the initial move. Very good for my S&P 500 trade. We are long S&P right now, so this is awesome. Nice pop up to 41.33, a tremendous jump. And same with gold, guys. Gold flying from 2007 now at this point up to 2021. Very quick move. Look at this volatility there, guys. And that is an impressive, that to me signals, hey, inflation looks more under control than the market may have previously anticipated, and possibly very bullish. Look at this, 4 green charts all at the same time. What a big move. CPI came out at 5%. Is that correct? We are coming in, I believe we had 5% year over year, a better than expected market outcome. Let's see if we can double check that. Guys, let me know if 5%, is that correct? Trevin in the chat says it's 5%. Let me just double check that, see if I can load it myself. But again, what a 5%. Look at that. CPI coming out 5%. Of course, why is this causing the gold market to go up? It's because the dollar is getting hammered on this news. And you can see that occurring across the board. The pound is up against the dollar. The euro is against the dollar. The gold market is up against the dollar. The S&P 500 is, of course, up. What a day here, guys, and the S&P 500 is absolutely rallying. This is great for our trade here. I'm currently long SPY, and wow, what a move there. $380 on the trade. This signal was shared this morning. Not yet, today. A couple days ago, we entered into the S&P 500 trade, and look at that, just keeps running higher. The beautiful entry that we were able to capture literally was right around the bottom. And sure enough, this thing just keeps going. This is a fantastic, fantastic move here. Gold up to 2020. What a move there. And let's go back to the individual charts. We'll take a closer look here, see what's going on. What a crazy move. Yeah, gold is absolutely going crazy, and very, very impressive. Again, this has been cool, guys. This is the continuation of what we have been calling for, which is, again, inflation seems to be getting under control. It seems like the Fed is in some ways accomplishing its idea of getting that inflation number down. Again, with a better than expected. I know that this number is red. Why is this number red? It's because for the US dollar, this is bearish, right? This shows that inflation is cooling. Of course, high levels of inflation mean that the Federal Reserve is likely to rate hike more. Why is this so impactful to the markets? Well, guys, we have a May meeting from the Federal Reserve where they're going to make a decision as to whether or not they want to raise by 25 basis points, or right now the consensus is either 25 on the upper end or 0, leaving things flat in terms of rate hikes. And with this news today, this side of the camp probably just got a little bit more popular. I was watching the latest in terms of Fed projections, and most people, about 75% of the market, was thinking, hey, there's a 25 basis point rate hike coming in May. Well, with today's news, slightly better than expected, that number probably shrinks a little bit, and we probably see a little bit more speculators, economists taking a look and saying, hey, maybe they just stay flat for the next rate hike, maybe they do not do another rate hike. Maybe they're done with rate hikes. This is what the market is pricing in here this morning. And again, this is why we talk fundamentals over and over, is because we have been sort of on that side of the camp. We've been saying, hey, I think that there may be a little bit overestimation in terms of, or maybe inflation cools a little faster than expected. And that's exactly why we have been long biased on things like the S&P 500 trade. Look at this beautiful breakout here. The signal from today is doing absolutely fantastic. Let's see what is going on here in terms of the S&P trade. So we took SPX500 410. So 2 days ago, we entered into the S&P 500 trade, and this thing just beautifully has rallied since. You can see our analysis where we essentially got in right on this blue line, and bam, just up to 41.50 we go. Fantastic move. Yeah, it looks increasingly likely, not a certainty, but increasingly likely that we could, in fact, have a pause at the next Federal Reserve meeting. And that is, of course, where things get very, very interesting. Because again, what that does, guys, is that if the Fed signals that it's going to potentially turn dovish or slow down its rate hike process, guess which markets could fly? Gold and the S&P 500. And guess which markets would die? The dollar, right? The dollar would get crushed in that atmosphere. So again, what this does, guys, and we're not going to have our data just yet. We really should get this thing to update a little quicker. We've talked about that in the past. It would be very nice. But anyways, it's not quite showing here yet, guys. But what this does today, this event showed that CPI came down to 5%. lowering our inflation even further, getting us further away from that peak inflation that we saw in June 2022. This continues to be a bullish catalyst for the gold and S&P 500 markets. In my personal opinion, I will continue to be long biased on both of them. Sorry for the voice cracks. It's early morning. I've got my coffee though, so I'm wide awake. Anyways, guys, in terms of inflation numbers, we will see this number now update to about 5%, which is what we got reported here today. A very, very notable number to hit today. And again, a better than expected CPI number. Let's talk about the other figures for a second. Month over month came out 0.1%. That's where we gained that 0.1% on the year. And if we take a look at core CPI came out as expected. If you want to take the other side of the camp, you may say, well, hey, core CPI is what Federal Reserve really pays attention to. And that came out as exactly as expected. But again, you get a little bit of optimism in the market with a lower than expected print at 5% for the year over year. So yeah, what a move there, guys. And yeah, gold just rallying back to almost to the highs. I think we probably see 2030 here today off of this momentum as the day traders get a hold of it. If you're looking at the gold market, guys, I probably wouldn't be trading it up here as a day trader. I'm not really a day trader. I'm more of a swing trader. So probably not my interest up in this area. However, if you're a day trader, take a look at this market. I mean, this is a nice chart pattern that we've got going on. You could make an argument for if you think gold continues higher, keep your fibs on the chart kind of thing. If you use them, I personally really like to use fibs. So let's say you get something like this, right? You get a big pop. Usually we see the big pop have some sort of a pullback in most cases. But if that pullback comes into this 2019 mark, wow, you might actually have a real runner here where this market just screams higher. And again, why do I think it's screaming higher? Well, I think that on the higher time frames, guys, gold has a bidding. It needs to, in my personal opinion, it really, really wants to come back to retest this high that we put in back during the invasion of Ukraine by Russia. We saw gold prices spike up to 2070. I think that there is a good, solid chance the market will retest that zone, and that leaves plenty of upside for both the day traders and the swing traders on the gold market. Now, again, for me, in terms of a risk to reward trade, for gold, I'm probably not interested at current price levels. I would like to see either a pullback deeper, as I mentioned at the beginning of the stream. Had prices made their way down to 1995, 2000, that mark, I may have taken the bait. I would have bit on that opportunity. But currently, where we sit, I probably can't get long. Though for the day traders, there very well may be some intraday volatility that traders could take advantage of. So here's your 30-minute chart. And again, I've marked our fibs where we had previous resistance come in around 2020, price breaking to the upside here today on this CPI number. How do we get a pullback? And if so, that could be an opportunity in the short term for the day traders to consider. Of course, like I said, this is not a trade that I would take, and this is also not financial advice. I'm sharing my personal opinions here, as always, with the stream. Please make your own decisions. If you're going to be a trader, you cannot just copy or rely on other people. If you're going to be a trader, do the work, figure this stuff out, work all the time in order to get there. It is not an easy thing to become profitable in the markets. Let's take a look at the GJ trade. Did that fall apart or did that stay alive here today? It looks like we are probably about to get trailed out for our profit. So again, gave back a little bit on this one. Despite that, though, still a profitable trade, and we will take that, no problem. So GJ, again, dipping on this release here this morning, which is very, very interesting. I actually am a little bit surprised by this move. I would have anticipated that we would see a little bit of an up move in tandem with the stock market. Not the case, though. We are still, however, long in the S&P 500 and testing resistance here around 41.50. Again, a trade that I personally have on myself. We're floating about $400, as you can see in my terminal here, about $400 on this trade. So nothing crazy, but what a beautiful start to the day here on that SPY trade. Very, very nice. S&P 500 again flirting with the idea of trying to break out of this 41.50 mark. Really, really a key level in the chart here in my personal view is if we can get above this resistance point, that clears the road ahead for more upside, in my opinion. So anyways, guys, let's take a look at some things. I want to show you something in terms of the smart money. Why were we bullish on gold? Why were we bearish on the yen going into this event? Well, it's because we were taking a look at the COT data. And if you guys don't use COT data, I highly encourage you to check it out for yourself. Here's what we're looking at. We're looking at big money and what they are buying and selling. And if we take a look at this list, we've sorted this really easily on our screens here, we've got most bullish assets by institutional traders on the right, and we've got the most bearish assets by institutional traders on the left. What this is showing us, guys, is this is showing us the most bought and most sold assets in terms of the futures contracts traded, according to the COT report that we get once a week. And as of the latest, I find it incredibly interesting that going into this week, the institutional money was piled into the gold market. Very heavy exposure to the gold market, as well as the oil market, as well as the Japanese stock market. And guess what? What is so peculiar about this in terms of institutional interest? Institutional traders were long gold, oil, and the Japanese yen. And all three of those markets are trading up this week pretty tremendously, especially gold and the Japanese stock market, which is not something we usually cover on the channel. But again, something notable is the fact that, again, you have, in terms of markets moving, you have the Japanese stock market, the gold market, the oil market. And this is what institutional money is buying right now. Well, flip the script, guys, and take a look at this. The Japanese yen is the most sold asset. And meanwhile, what is the Japanese yen doing? Well, again, I told you guys we were long GJ. That was a trade we took, and we're still in that trade. Here we go. Pound is up, Japanese yen is down. USD JPY, this was probably not a good example because the dollar yen, coming down here today. But you can see still the point is the same. Price making a move up. And then if we even go further, we could take a look at like Euro JPY here, Euro yen. Look at this. And again, this is observing what institutional money is doing and using it to our advantage. So again, we see Japanese yen very short. We see euro, gold, oil, and the Japanese stock market as very heavily bought by institutional traders. Very, very interesting. So if you guys want access to this COT report data, by the way, we do have this available currently inside of our website. If you'd like access to this, we are currently doing our 1-year celebration sale. So we've been working on this software. We run a software company, my company, A1 Trading. We build tools for traders. And if you would like access to this tool today, we are doing a one-time massive sale to celebrate the 1-year celebration. If you want access to this, I'm going to show you something really cool. If you are a viewer or a live stream viewer, if you want access to this data, head over to our live chat feature. We're going to link it in the chat here for you as we speak. There's going to be a link that's dropped in the YouTube chat. Click that. It's going to open up something like this where you can have a direct conversation with one of our team members here at A1 Trading. So click this link, click live chat, and then click tell me about your discounts. If you want access to the tool, again, like I said, we are doing our 1-year celebration sale to get people access to our software that we've worked really hard on the last year. There's about 10 people involved in our software development company and all the content that you guys see here. So we've worked really hard. And again, the 1-year celebration sale is a limited time thing. So if you want access to that, that's why I'm promoting it here today. And again, yes, it is a pitch. I have no shame showing off such a cool tool that so many people have worked tremendously hard to build for people. So if you want access to it, like I said, click that link in the chat, send us a chat, and ask us about our discounted product. We have a massive extra sale discount going on right now for people who are interested. Again, let's get an update on what's going on here with the markets here this morning. Gold popped big time, making a break for 2020. And there it goes, still holding above this previous high. And again, in the intraday, I mentioned an intraday idea. For the bulls out here, big pop, as long as this candle closes bullish. And again, we've got about 15 minutes left on this candle. If price is able to pull back and come into this level and hold some of this strength above 2020, it's looking really good, right? In my personal opinion, this looks very optimistic for gold, especially with a better than expected print in terms of CPI here today. Also very good for the S&P 500 trade that I have on. What a move, guys. That is fantastic. The S&P trade is just flying high. So congrats to members inside of the Discord. We are still long here and long on 2 assets currently. I am personally S&P 500 and GJ and looking for an opportunity to get long gold. I'll be honest, I am interested in buying gold, but only if we get that pullback, we can get a calculated risk that makes sense to take that trade. So that's where I'm at with that and taking a look at gold here as we watch this chart go crazy here this morning. And again, S&P still looking hot. Goal is to trail stops. For those of you who are inside of the group, I will be trailing my stop loss during today's price action. At this point, we've got a really nice runner and I took this in 2 different accounts. So we are up pretty nice on this S&P trade. So S&P longs still holding on. Am I going to get stopped out of that GJ trade? Let's see. No, not quite. And again, support is holding so far. For those of you who are watching GJ with me, if this market breaks support here around 165.54, if we break this level, yeah, I'm going to go ahead and get out of my trade for a profit. We're floating about 250 on this, which is, nothing crazy. At one point, we were up like 500. We have since given back a good bit of that profit. So, of course, it happens sometimes. It happens very often with trailing stops is that, you catch a move and you're able to capture a nice profit. But sometimes you have to sort of really be patient with it. And other times you even give back some of your profit in the meantime. So again, we're still holding on to that GJ trade and seeing if we can catch some moves there. So where's Frank? Frank is out of the office today. He had to, he is still working. He's just working remote today. He had something going on. So he is unfortunately not making it in. However, we will hear from James here in a second. He's going to take over the show for a second and have a quick word from one of our sponsors. So we're good to go there. James, you take over the show for a second.
Thanks, Nick. A1 Trading is excited to finally announce our official partnered prop firm, and we've got a pretty awesome offer for A1 Trading fans today. Superfunded is a new prop firm to enter the space, and they're looking to fund profitable Forex traders. If you have the skills but lack the capital, Superfunded is the answer. With Superfunded, traders are able to take an examination to prove their trading skills and have up to 90 days to pass. Superfunded is ideal for both swing traders and day traders, and even allows their traders to hold the positions over the weekend. Superfunded is a funding program powered by 8cap, created for traders by traders. So if you're looking to get funded, check out their examination today, and you can get 10% off that examination fee when you use promo code A1 Trading. So Superfunded, again, brought to you by 8cap. We are fans of Superfunded. We are fans of 8cap as well. They have different examinations for different account sizes. Larger account sizes cost more, but they have all sorts of different options to fit whatever budget you may have. And you can get that additional 10% off when you use that promo code A1 Trading. So go down into the links in the description below and check out Superfunded. Thank you so much to Superfunded for sponsoring them, our official partnered prop firm. But with that, Nick, back to you.
Thank you, James, for that. And yes, guys, check out Superfunded. Link is in the description. Andy Boy had a good question in the chat here for us, and I don't mind this question at all. Andy Boy asked, let me see, why don't you announce gold trade running minus 200 pips? Join our VIP now when you lose too. So that's a good question. And here's the thing. 2 things. Number one, we announce losses on this channel all the time. I'll be completely honest, in terms of like a mental health thing, being in front of thousands and thousands of people and talking about your trades is very, very difficult. And there are times when things are really good, and there are times when things are not good. And I talk about it all. Right now, recently, Andy Boy and anybody else who questions that, it's fair to say like, hey, why are you only showing winners? Right now, we only got winners up in here. I'm just kidding. It's not all the time. But right now, that is the case. Right now, we've had a win streak going on, which is fantastic. But I can assure you that when we take losses, we also talk about them regularly on the channel. I'll give you a recent example. Recently, I messed up on dollar yen. I was long biased on dollar yen during this fall here. During this time, I caught several attempts to try and catch a dollar yen long. I believe it was here and even here. And one trade, I was able to get a break-even trade, and 2 of them, I took losses. And I did that in front of the entire YouTube community. And if you think I didn't get made fun of and didn't talk about it, you'd be wrong, because I got trashed on YouTube. And hey, it comes with the territory. I do this every single day. There are times that I'm right, there are times that I'm wrong, but I will. And my promise to you guys is I talk about wins and I talk about losses. I don't hold back. I talk about everything. So I can't seem to shut up. So again, wins are wins, losses are losses. Right now, things are hot. And this is the thing when it comes to trading. And the reason I address that is because, again, you're always going to have people who sort of like challenge you on social media. Again, it's easy to cast stones from the chair, but it's very hard to, I'm telling you, it is not easy to get up in front of everybody. But what I found to actually make it easier is to talk about wins and losses. I talk about it all, and I point out my flaws when I have them, because it makes my job a little bit easier. Again, you would not imagine, before I got comfortable doing that, the amount of internal pain that would be caused when you feel like, when you have that imposter syndrome where you don't feel like you're telling the whole world everything. What I found is I just wear it with pride, whether I'm winning or losing, and I don't really care what people think. So, hey, that is Jayla says, period, Nick. Thanks, Jayla. I appreciate you on that. Guys, I want to make a quick shout out. If you guys are in the Southeast in the US, we've got an upcoming event, and I keep promoting this. If you guys are regular viewers, you've heard me say this. Tune me out for a second. We've got an upcoming event in Atlanta, Georgia, in person, and I want to shake some hands and meet some of you guys. If you are near the Southeast, or you can make it to this event, it's free to attend. We'll have lunch there and all sorts of stuff. I want to meet some of you guys. Come join us for that event. If you have interest in that, my team is going to drop a link in the chat here for you. If you fill out that link is going to let us know that you want to come to the event. And one of my team members, or even I've done one myself, one of us will call you and confirm that you're coming, give you details. And again, it's free to attend. So if you're in the Southeast with us today, there's 700, 800 people watching right now. If any of you guys want to come to that event, it's April 22nd. It's on a Saturday, and I'd love to meet some of you guys. So if you're near, come join us. I'd love to. Jayla is saying, is supporting me in the chat, and several of you guys, thank you so much for that, guys. Negative criticisms that aren't helpful in any way. No, don't worry about me, guys. This is my third or fourth year on YouTube. I am so used to it at this point, but I like to address, criticisms, and again, just like my losses, take them on my shoulder and sort of just answer them, because again, this is stuff we all think about. There's nothing off the table in terms of trading related thoughts that I don't talk about on my channel. So yeah, transparency. Kyla hitting us with some transparency. If I lost 200 on UJ this week, I messed up around and missed the move. Lost money trying to catch up. Hey, it happens to all of us at some point or another. Trading is difficult stuff. And again, we don't have to pretend like it's easy money, right? Not on this channel, maybe somewhere else. But leave that at the door when you come to my channel. This stuff is hard, and we work together every single day to get better at it. And we face the reality of how difficult it is to trade. And there's no easy money in these markets, man. There are times where it feels like easy money, but there's also times where it feels like impossible to make money, right? So again, risk small, do your due diligence, do your back testing, get in there and do the work. Again, there you go. Jason Webb, I know that you're showing up. I saw you on the someone who was it? Were you speaking, Jason? You're speaking to Hallie yesterday on the website, and she said, "Hey, yeah, Jason was on the website. He's coming to the event." So can't wait to meet you guys. And oh man, I cannot explain how excited I am just to do an in-person event like never before. It's going to be the greatest of all time, and again, free to attend. So again, click our link. Let's drop that link one more time if you guys don't mind on the producer side, in case anybody would like to show up. Click this link, fill it out. We'll give you a call and ask if you're coming. It'll be awesome. So yeah, Andy boy, no hard feelings, my friend. I'm just, I'm talking about it. You brought up a good point. I'm not here to judge or challenge you or anything. But again, you ask why I don't show losers. I actually do very often on my channel. There's no question I do show losses very frequently. And I do because I think it's helpful to both myself and to my audience. So that is why. Let's take a look at that gold chart, guys, see what's going on. Gold is flying high here this morning on this news. And look at this. If you caught that pullback, shout out to you. Look at this. Price sold off here prior to the event. CPI came out better than expected. Well, the question is it better than expected or not? It depends who you ask. If you ask the dollar bulls today, it's not better than expected. It was actually worse than expected, because the more proper phrase is inflation came out cooler than expected, which caused the dollar to sell off, and it caused counters to the dollar to go strong. Euro, pound, gold, and the S&P all rallied on this cooler than expected inflation. Why? Because the Fed is so hyper focused on this CPI number. They want that number to get down to 2%. We are still a long ways off at 5%. So we have work to do in terms of where the Federal Reserve wants to get us to. However, it is probably getting a lot closer each time we get that inflation to come down. It's getting better and better in terms of that. Now, why does this matter, guys? I want to talk about something. Right now, inflation year over year is at 5%. Now, if this number continues to decrease, check something out with me. This is inflation, okay? Interest rates are at what? Interest rates are also at 5%. What's very, very interesting, and we'll go take a look at this just to confirm that I'm not making this up. Let's go to interest rates, and let's go to, again, we can see US. The US interest rate, the Federal Reserve funds rate, is at 5%. Inflation is now also at 5% year over year. Why does this matter? Well, again, this shows us there's a better probability as we get closer here. We're getting a better probability that a soft landing is potentially in the cards. Now, again, I am no professional level, high level economist. I'm a trader. So I use this information and I play trades off of it. But knowing that interest rates, again, are at 5% and inflation is at 5% as well, if this number over here continues to shrink, it is very possible that we do, in fact, see this interest rate number start to come down as well. And again, if inflation hits like 4%, if it hits 3%, if we get down to those rates, your inflation rates, then we're probably going to see the interest rate start to slowly cool or even potentially get cut by the end of the year. That's the camp I'm in personally. That lends me to be bullish on gold, the S&P 500, and bearish the dollar. That is where I am at and have been at for a little while, and it's proving out to be a profitable position today. Again, continuing to hold on to the S&P 500 signals shared inside of the group, as well as GBP, JPY. So, oh, look at this. And GJ may give us a little bit of a chance here to stay in the trade. Again, caught GJ over in this area. Beautiful, beautiful run up on GJ. Did pull back here this morning, but so far showing a little bit of resolve, holding this support zone that we had marked and have not yet been hit on our trailing stop at this point. So, yeah. So, I need to do something. I want to ask you guys. Actually, I don't know if it's worth asking, but I'll ask it anyways. Something on my mind right now is I want to redo our studio. The studio you guys see here, I like to change it up every once in a while, bring in some new features, and I'm thinking about at some point making a change. I think I want to go more news station wise. I think we're getting to that level. I've been doing this for a long time, and I feel like that would be cool to maybe get like a news desk or something like that. Why not? And at some point, we've got enough people rotating in and out. It's starting to look like a news station with the help of our awesome producers. We've got all this stuff going on. I think it's probably time that we make a change. Now, of course, I love the strobe light. That won't go anywhere. I love that light feature, but I'm not sure. I've been thinking about that. I don't know if you guys have been thinking about that or what you guys think about that, but I feel like we need a change up. Just a side thought. I've been working in the same office for a little while now, and I like to change it up every once in a while. So look at this. Gold continues to hold its 2020 mark, still strong above that level. And again, if you were on the day trading side of things, it pulled back just briefly here after that spike, came down into that 2020 mark, and so far still looking pretty strong. We'll see if that can stay strong above 2020 here today. Again, I'm feeling a little like I missed out on the gold move here because again, I wanted it around that 2000 mark. Didn't quite come back for me, so I missed out on that opportunity. But it's okay because, again, the same benefactors to this trade, right? Again, cooling inflation, potential rate cuts later on this year, at the very least, the increased probability today that we possibly see rates just stay flat in the next meeting. That probability probably went up today. That is the key factor why the gold market, the S&P market, and the dollar are moving the way they're moving today. It makes a lot of sense. And I think that the market is sort of pricing that in. And again, we've been in that camp ahead of time. So that's why we're in profit, right? That's the idea. We caught that trade before the market sort of came to know the same information. Now, we didn't have inside information or anything like that. We just sort of are taking the clues, we're taking the trends, taking the momentum of the market, and trading it. And that's again what we do here every day. The economist stuff can get real deep. The fundamental analysis can get real deep. And I do like to, learn as much as I can about that stuff. But the other day, the goal is to take the picture and to look for momentum and trends and trade it, right? Get in, get out, kind of make our money and move on. Again, 2 trades I've got right now. For those of you guys who are watching, they are at the bottom of the screen. The producer's got it all set up so you guys can see that live. I've got long positions on GJ and SPX500. So you can keep an eye on that at any time, and that will stay pretty updated. Chandler does a good job just keeping you guys in the loop with that. So yeah. What's your analysis on UJ? Probably more bearish than anything right now. Well, not necessarily bullish or bearish. I don't really like the yen and I don't really like the dollar. So probably not really one that I would trade. If it's going to be currencies that I'm trading, usually it's going to be one that I like versus one that I dislike. And right now I sort of am bearish or dislike the Japanese yen at this time. Momentum is to the upside. Things look pretty good. And again, I've got a trailing stop on this. So we'll see if we can make money on GJ here. So there you go, guys. Now we're going to bring in an old friend of the channel. He's back and he's better than ever. Mr. Ryan Topp. What's going on, Ryan?
Hello, Nick. I'm not too bad. How are you?
I'm good. It's good to see you and good to have you back. I know you've been on a couple of times, but it's our first chance to cross parting ways.
I know. Yeah, I think things that you've had, things that I've had here. Obviously, I think I was streaming on A1. Well, it must have been a year ago, I think, when I first came on, and then a couple of months of break, obviously doing stuff here, and now back. So it's good to be back.
Yeah, it's awesome to have you back, and I'm liking your office. You got a nice office there. What's the new studio looking like?
Yeah, so this is actually a tiny office, and it's probably my favorite office that I've had. I've had a couple over the years, and this is probably, it doesn't look like it on stream, but it's probably about 1.5 by 1.5 meters big. So it is actually a tiny office. But
okay.
Yeah, I really like it. I don't need anything more. I enjoy coming into here, get the nice lights on. So yeah, it's a nice little space that I can just come in and do my trading, and and really like it.
That's awesome. So Ryan, what's your take on all this stuff? If you've got your screen, we can pop it up on the screen. What's your take on all of the volatility here recently? What are you watching?
So for me, I've been in. I know you said you took an S&P long just this morning, right? Which I think has obviously
it was 2 days ago, but yeah, I've been holding on
2
to
days.
it throughout.
Oh, apologies. Yeah. So
no worries.
I've been in my trade for about 2 weeks, really since the break of this zone down here.
Mm-hmm.
Coming from a kind of weekly perspective, I was using simple trend theory for me, from taking it out from a much larger term, really from the COVID drop down here.
Yeah,
I was kind of liking where we kind of were, smaller head and shoulders, kind of retesting that head and shoulders, get a bit of volume coming in, and just for me, again, impulse corrective, that simple theory. I just kind of liked where we are, taking away, and probably fundamentally I didn't agree with that, but taking away which I do. I'm purely technical.
sure.
Taking away all that noise and being, I guess, what I call blissfully ignorant, seems to kind of help my trading. So yeah, for me, I've locked in. I've taken half off. This is the only position I am in. My stop is locked under here, and hopefully getting a little bit of probably reactionary resistance around this area, but hopefully it continues on up and I can move my stop up and just ride the wave however long it wants to go, if anything can happen.
Yeah, that's awesome. No, and I think in many cases the technicals are a valuable piece to any analysis in terms of what I do. So even if I'm using fundamentals to sort of guide direction, it's still very valuable to me to keep an eye on the technicals and make sure that they look good before I take any entries. So I like that trade on the S&P for sure. You've got it earlier than I did. So actually, a little bit earlier than I did. So that's awesome. So yeah, very nice trade there. And I think that, in terms of just the stuff here today with the CPI numbers coming out cooler than expected. You mentioned 2020, Ryan, and one thing that was huge during 2020 was the market was getting pumped full of money, right? They were printing so much money. We've been
Yeah.
dealing with the repercussions of that in the
Yeah.
following years, where we've had, downward markets for a year and a half, 2 years kind of thing. And it
Yeah.
finally seems like there's a potential light at the end of the tunnel, where some of those
Yeah.
problems are not necessarily going away, but becoming more conquerable, if you will. So it's nice to
Correct.
see, in terms of, coupled with that, with the technicals, that you're catching some of that same momentum, which
Yeah.
is
I
fantastic.
think it's I mean, I think Michael Burry put out a tweet saying where this generation's quite good at buying the dip.
Yep.
But I think inherently something for me, again, just going off a kind of hunch that I've had, I think, people have wanted this market to pop, and maybe data like this. Obviously, we've got FOMC tonight, stuff with rate hikes. Let's, maybe we don't know what's going to happen in the future, but I just think, maybe we get a pop out of somewhere and we get a bit more optimism with the data coming out, and we see where we go for the remainder of this year. So it'll be very interesting.
Yeah, absolutely. Yeah, no, and that's fantastic that you caught the same trade. I think that's really cool. So
Yeah.
Ryan, I'm going to leave you to do your analysis here, share with the audience. Before I do, though, I want to make sure that if any of you guys would like to check out Ryan's channel, he's got his own great content that you can find on his channel. We're going to drop a link in the chat here live, so that you guys can subscribe, check him out, see it for yourself if you like what you see here. Ryan, thank you for coming on the show, and good to see you again.
Yeah, good to see you, buddy, and appreciate it. I'll chat to you again soon.
All right, we'll see you next time. See ya.
Thanks, mate. Hello, traders. Let me just pull up the chat here. Sorry. Hope everybody is well. Did anybody? I have to say, I was a little bit. So I wouldn't say surprised by the news today, but I probably wasn't expecting what came out today. I'm not sure if I'm alone in that. But let me know if you were expecting this. One thing that is important to know, even though we have had a spike, we are at an area where we could, as I said, see a little bit more resistance. So I'm interested, even though you're kind of expecting maybe the market should rise on this news. We do have news later, as I said, speaking to Nick, but this 4 hour from a technical perspective isn't closed, right? So how often have we seen, and this is one of the reasons why I'm 7 years into my trading career now, and why the fundamentals have taken less and less of a toll on my trading, where now I really don't, I don't want to say I really don't consider them, but I probably consider myself blissfully ignorant. I take account of them, but when I was going and developing my edge and back testing my strategy, I didn't know what was happening in fundamental wise in 2015 or 2016. Yeah, I just continue on sticking to my plan, and that is a technical based strategy. So for me, on this S&P trade, I've taken half off at 2-to-1 risk reward. So I've banked on my risk 1.5%, and half of my trade is simply running. So I almost got caught out of here, and just simply looking for a new swing. Now, as technically we've broken these highs, so our previous highs. So from simple Dow theory here, we have broken the highs here. So all I'm looking for now is this to potentially come down. If it wants to push on or come down, create a new anchor, and I can just continue to move my stop. And as I said with Nick, ride this all the way up. So it's indicative for me. I actually lost a trade in Bitcoin. I think I lost a trade on EuroCAD. I think it was EuroCAD or something else. And this is the only winner that I've had in March, but it's absolutely outperforming my losers. So, simple case of win more when you win, and your risk management. This is a funded account, Aaron. So if you don't know, most or 99% of funded accounts use demo. That's why it's demo. But I can show you my annual. Anyway, I've shown that before. I've got my FX book verified, etc. Hey, Ryan, hope all is well. Can you have a look at NASDAQ? Yeah, RSI is the best thing that can happen to a trader. Yeah, maybe. If you use it in confluence with other things. I personally don't massively like the RSI. I think RSI is usually for, I say, it sounds bad to say, but a lot of newer traders come in and use the RSI because it's relatively a simple concept, right? It's oversold. I'm gonna buy it. It's overbought. I'm gonna sell it. But how often do we see, certainly from a higher time frame perspective, things to be oversold and it continues on down? So I think RSI in confluence with things, possibly possibly divergence kind of seems to look used good with, but yeah. I'll go through the ones that I'm looking at. So my watches today, a few of these are off, but a few of them are still on. So I was looking at the dollar shorts. I think that in terms of my watch list, obviously here in Dubai, I analyzed the markets probably about 9 or 10 hours ago. I was looking at dollar shorts here. I kind of liked where it was. From a 4-hour perspective, as we're looking at the markets. Now, one of my favorite setups, or one of the setups, the context that I like, is called the V reversal. So a V reversal, simply the clue is in the name. And certainly V reversals that come counter trend. So it didn't happen here, but often you kind of sometimes see them in news events. If you're moving to the downside, you get that V reversal where potentially retail's getting stopped out and we move in the direction of trend. Now, we didn't get that, but we've got this impulsive move in the dollar and completely shut down in the subsequent 4-hour bars, creating that V reversal. However, there just wasn't enough accumulation prior to the break, i.e. prior to the break of this significant level for me to get involved in it. But I liked where it was. We've seen some impulsive moves in the dollars being shut down. Overall, from a weekly perspective, I'm still liking where it is from a shorting perspective, and have done for quite some time. So from here, I still, maybe, is that a word? Maybe, maybe from a weekly perspective, we could see something like this, but, ultimately I'm looking for a dollar break here. Still got a little bit of time to go. So dollar shorts is still there. I still think breakthrough, but maybe we need a little bit of consolidation. Let's see how this move plays out over the course of the week. Another one I do like actually is Euro Yen. So I think, did someone ask me about Euro Yen? I'll go into your pairs that you've shouted out, guys, in a second. But I do like this. So again, I always take a top-down view of my charts. I always have to have higher time frame confluence. That is an argument, probably where a little bit of my edge comes from. Making sure that the higher time frames are really what I call RTM, right? Which is ready to move, which is a very simple concept, but requires a lot of patience. So here in Euro Yen, I'm considering this is our Dow theory uptrend from our latest push. We've got our ABC corrective, and we're breaking through, which is my favorite break, is a break of B wave. So we've got our morning star here coming on a relatively decent volume signature. Again, going with that overall trend, breaking through structure. Weekly perspective there for me is pretty good. Move down to the daily. I've got my reversal cup with handle. We've got our moving averages on side. We've got our 20 period curling up. We're coming out of this corrective. So for me, the premise of Aussie dollar, of Euro Yen is that if I'm right in my long perspective, right, we come out of this relatively decent corrective and we push on in our impulsive manner and we push on relatively well. So we're ready to move. So I like where this currency pair is because of the potential of where it could go. So 4 hours, the trading time frame, and again, similar context. I look for the same things day in, day out. First initial structure is our V reversal, creating our significant zone. We've got our ABC corrective back, digesting this latest impulse to the upside, and creating our secondary structure here. So essentially V reversal followed by V reversal, breaking out of that area. Not only are we breaking, we're breaking on an uptick in volume, which I like, and looking for a retest of this area for continuation to the upside. Yen relatively weak. I like the idea of selling the yen. And going with that, again, technical theory, going with that overall trend. Now, with my retest, what's important here is I need a reason to go long. So if we're retesting back to this area, I don't just buy willy-nilly and just say, right, I'm happy to buy here. Again, that could be good, that could be bad, depending on how you view markets. But for me, I need my catalyst to entry. So my simple chart patterns, whether it be your hammer, your engulfer, outside bullish engulfer, morning star, whatever it is, some bullish chart pattern on an uptick or an increase in volume. So ideally for my retest, I don't want to see it kind of come down like this. You want a very steady state price action moving back, lowering volume during that retest, and ideally an uptick in volume on a catalyst that I like. So that's what I'll be looking for Euro Yen, and that's probably my pick of the bunch. However, I do also like an exotic in USD Mexican. Do you have a YouTube channel? Yes. Sorry, I'm just going through all the chat now. Sorry, guys. If you've got any questions, put it in. I do have a YouTube. Yeah, it's Ryan Topp. Oh, thanks, Nick. Appreciate it. Aussie dollar. Okay, I'll do Aussie dollar. USD Mexican, I'll go through first, guys, and I'll do the ones you want me to look at. So USD Mexican, again, very simple trend theory, going with that overall trend. Where are we going? We are going down. I'm looking to sell it. It's not rocket science. We had, again, that little impulsive move back up to that 20 period. And you can see on that daily what I'm looking for in terms of a breakout. The good thing about this is you got a positive swap. I do like the exotics. Creating this move here, i.e. creating our V reversal. And what I'm looking for is in our secondary structure here, the digestive period. So the most important part of a breakout, I'm a very simple breakout trader. I always believe that simple is always better. The acronym, anyone know what this stands for? Personally? So let me know if you know what that stands for. A little bit of fun. Anyway, for USD Mexican, created our first structure. We can see here wicks to the upside. We've not created a higher high. So in terms of trend theory, we are still moving down. But I don't feel like this period here is digested enough for this latest move here to the downside. So even though we've created our first structure, this is the most important part here. Because if you think about it simply, where on smaller time frames, we're coming from a downtrend, we need a pullback or a retracement pullback through time, or price, corrective through time, or corrective through price. And we need to digest it. Keep it simple, yeah. Keep it simple, stupid, but keep it simple, silly, yeah. KISS. Very good thing to remember. I'm not the smartest guy in the world, but you know, I always think that keeping it simple is always better. So what I'd either be looking for is this to turn into a potential ABC, which I don't think will happen. But if it does, and I get my catalyst to entry, I can look at an aggressive entry, which is my kind of pre-breakout strategy, to take it short roughly around this area, looking for a slight wicked movement above A, i.e. potentially where retail is for shorts. I don't think that's going to happen. So what I think may happen, or what I require to happen, is possibly a little bit of accumulation here. Let this 20 period catch up. Let us digest this latest move and take a break to the downside. So I do like that. As I said, path of least resistance is down. Whether whether I get it or not, whether I get that accumulation or it breaks too early, then if it does, I've got to let it go. And sometimes that happens quite a lot for me in my relative particular setup. So if something goes on, I can't get FOMO and you know, enter in without fitting my entry criteria, essentially. Why isn't it simplicity? Yeah, that's a good way of saying it, Trevor. Well done. Okay, what do you guys want me to have a look at? I'll have a look at a few before I'm playing football or soccer tonight. As you say on the other side of the pond, soccer. Excuse me. But I'm playing football tonight, so I can't stay on too long. Euro NZD. Okay, Euro NZD. Was anybody trading the news today, by the way? Does anybody actually trade the news? Yep, I've seen EN. Don't worry, Amber. I can see you there. Okay, EN. What I think of EN, I liked EN. I've been trying to get involved in this long for, or I think I did try to get involved in it long. Didn't quite give me a setup around this area. I think Euro NZD, albeit I could see Kiwi come into some strength, certainly if the market keeps pushing, but you can't discount what you're seeing on that daily. It looks relatively good to the upside. 4-hour perspective. I mean, be aware of what's happening here, right? Be aware of what's happening here. The euro is known for, and it's not happened here, but for me, I've seen a lot of these climactic moves or climactic pushes that's steeply sold into. Yeah, well done, Marco. Good man. Yeah, I'll look at USD yen. So I wouldn't be surprised if you saw some move. Now I wouldn't be surprised, but you have to say that the higher time frames on Euro NZD, although I don't like it in my head, even though I don't trade with my head, or don't trade what I think, I trade what I see. It looks good to the upside, Euro NZD. I have to say, maybe you come back and retest that significant area, but I mean, relatively healthy. Relatively healthy here. So EN, yeah, maybe a slight pullback, but looking for it long. USD yen. You do not know what you're talking about, oh, don't I? Oh, I thought maybe after 7 years I might have a clue, but I guess not. USD yen. Let's have a look. You're short USD yen. USD yen. I mean, it's two relatively weak currencies right now, isn't it? I mean, bias for me would probably have to be short. If this closes strong on this daily, maybe a bit of volume coming in. You could say that from here, coming down from here, that would be my bias. Simple trend theory. I would actually think that's not a bad place to sell it, to be honest with you. Have a look at the 4-hour. And this is one of the reasons why I really like the ABC. It's my favorite. You could call it. You can kind of link it in, I guess, with some kind of liquidity. But what do you expect? Do you expect a lot of retail stops to be here? Tapped it in and potentially coming down here from this move. And again, you look to the left, essentially. Where are we coming from there? So, yeah, I like, I mean, thinking out of it, you're saying two weak currencies, and that probably I agree with, but I don't mind where that's at. I mean, what's your bias? Are you looking at short? Yeah, short. Yeah. Buying for Anant, buying on USD yen. Yeah, I mean, maybe to hold on FF&C. Yeah, you could be right. I mean, for me, as I said, if I've got a trade on like the S&P, I just because when I was back testing, I formed my edge. I didn't know what was happening, so I just kind of keep to my strategy. But yeah, if you're taking a trade at that point in time, and you've got a short stop, that would make sense. I have to say, looking at a 4-hour, I don't mind where that is. If you get a little bit of momentum to the downside with some dollar weakness, which relatively could happen, obviously. The dollar is looking relatively weak, and I think that continues. Certainly, if you get a break underneath that area, right? And I think it's relatively healthy, as I said, from a weekly standpoint. It's not like we're breaking through from deep and looking a little bit extended, breaking into a significant zone. It doesn't actually look that bad. You've digested this latest, and if it does break through here, okay, you still got some dynamic support, but in terms of your UJ trade from a 4-hour perspective, you can say, well, we've got the 100 psychological barrier as well. Yeah, the dollar could really fall off. It could really fall off, and that would be my personal bias. So UJ, yeah, I like it short. You know, you get here, you break underneath here. You know, there's no, you've got a little bit of a barrier here. You're probably expected to get down there and test it, test that, right? But from a breakout, I'm a breakout trader, right? So if I'm looking breakout, I wouldn't be taking a break from there. You know, you're taking a break and you know, from deep, and that's often where you see those fakes. So yeah, I agree. I essentially agree with you. There's my long-winded way of saying, yeah, I probably agree with you, Jay Shorts. But who knows, huh? Who knows? Don't have a crystal ball. I wish I did. But yeah, I would agree with the bias. GN short. I'm an ICT charter member. I'm no way more than this guy. Oh, okay. Cool. Okay. GN. I said GN. Let's have a look at GN. Yeah, no worries. No worries. GN. Okay. Well, who asked me about GN? What are you guys looking at? What do you think about GN? What does your strategy tell you? Remember, as traders, we want to be in here for a long time, not a good time. We have to have a strategy that we stick to. That is your Bible, as they say. Your entry criteria. What is your entry and your strategy saying about GN? I know you maybe newish, obviously. I'll do Nasdaq as well, yeah. So we're obviously testing these highs. I mean, for me, in terms of GN, when you get to a significant zone like this, I'm just letting the market tell me. You know, if I'm looking to trade it, again, I'll be looking for something like this and then a break to the upside. Yeah, I know, I agree. Who I said that? I said, yeah. I've been in, trust me, I've been in the market a long time. I'm seeing many a new buzzword come and go. And a simple breakout trader like I am, I'm still here. I am still here, and I'm still happy. I'm my best year of my trading life last year. And it just resonates with me. I mean, if you're an ICT, if you're an SMC trader, great. You know, firstly, always the first thing I see is order blocks or whatever. The first thing I always say is show me the data over the past 3 years if you're profitable, or 1 year or 6 months. Inevitably, for a lot of traders, they can't do that. Right? They can't do that. So yeah, I mean, I'm not, and unfortunately, it does get a little bit. I'm going off a little bit on off topic here, but unfortunately, I do think trading social media gets a little bit toxic sometimes when it doesn't need to be. You know, we're all in here together. I've never ever met a profitable trader who like bashes others. Essentially, you know, that's I wouldn't do it personally. I know a lot of people wouldn't do it. You know. If people are new, people are not new, people trade a certain strategy, let them. If they've got an edge, why does it matter? I don't really understand it. Anyway, GN from a weekly perspective, you know, I think we've moved relatively decent, a little bit climactic move into the area, a little bit of a gap between that 20 and price action. Would I be doing anything with GN right now? No, I'd simply be leaving it be. I don't think there's any reason for me to get involved. As I said, if we from a weekly perspective, if we retrace a little bit and maybe healthen up, i.e. you get your pullback, possibly price action that looks something like this, so your break is a little bit more healthy, then I would look at it. But right now, GN is not for me, really, not for me. So I wouldn't really want to give you a bias. Down here, yes, okay, it looked a little bit better down here, but it's getting to the point where I'm going to sit myself on the fence and leave that, to be honest with you. GJ, okay, I'll do GJ and then I'll go. I don't trade liquidity. Yeah, I don't know if that's to me, Trevor, but yeah, I'll certainly sit myself. I can sit myself on the fence. That's okay. There's a lot of pairs that I just, you know, and when I do my scan in the morning, if it's not how I like it, I'll just leave it. I think that's personally one of the strengths of my trading is that I can take a couple of trades a month. You know, I don't need to be in a lot of trades. Okay, I'll do GJ and Nasdaq. I'll do GJ and Nasdaq. So GJ from a daily perspective, I don't mind. Again, I don't mind where it is. I don't particularly like it. If you're asking me about GJ and EJ, I'd much rather be trading EJ. I think from a higher time frame perspective, that is just in a nicer position. You know, I look at that and that's the monthly, and I think, okay, I can get involved in that. I understand where it is from how I look at charts. For GJ, you know, what you could say, and in terms of a long bias, I don't have a short bias. I would have a long bias on GJ, right? Is that you would probably have expected, it to move to the downside from here, right? But it's not done that. So now that we've broken through, I wouldn't really be looking at shorting GJ just right now. I'd be looking at longs. So from a daily perspective, 4 hour, 4 hour, you're getting a slight move up here, break back down for something like this, potentially to go long. I like EJ better, I have to say. What are you? Who asked me about GJ? What are you guys looking at in terms of GJ? Are you looking long or are you looking short? Because I don't like when you see price action like this, right? So for my breakouts, right, I don't like seeing that. So if I'm creating first structure, I don't want to see this because I worry about a slight retail move, stops being taken out, and then we move to the upside. If you see that, then okay, but just makes it a little bit messy. So again, you know, I could give my bias on other pairs, but I don't like GJ. I don't like where it is. All I would say is you would have expected to move down, and bias for me would be potentially long, but it would need a little bit of retracement here, little corrective, probably 20 period catch up and then go. But I always, you know, I want to see this area be a bit more significant than it is. So yeah, another one. Unfortunately, I'll just have to sit myself on the fence. Yeah, I mean, GJ long would make sense, right? Yen's been weak. You know, you look at that from an overall perspective, it would make sense. It was looking, I kind of liked it from here. I have to say, I was looking at it from around this area, but the last couple of days, it's gone a little bit haywire for me. It has to neaten up a little bit. You know, even if you get a little bit of accumulation here, I wouldn't mind that. You know, you're on the right side, obviously. You'd probably expect it to get up and tag that handle, right? The 171 handle, roughly. So, yeah, my bias would be low. Nasdaq, sorry, Nasdaq. I know someone's been calling Nasdaq for a while. Gold, I've not done. I think Nick did gold. Let me do Nasdaq first. Yeah, see this from a daily perspective, I like, right? I kind of like where this chart is. I like all the indexes, to be honest with you. I like them long, and I've liked them long for a while. So again, simple trend theory, people might go, oh, that doesn't work. I'm telling you, you do it, you know, simple chart patterns, your wedges. I think there was a study done actually that if you just traded them all the time, they don't work. I agree with that. The most important part of what we're seeing in price action with your simple pullback impulses, right, is your context and where it is. Because there's what, you know, if you got like a chart like this and you've got a wedging structure up here, right? Are you going to long that? No, it's got to be, you've got to have multiple confluence. You've got to understand where the higher time frames are. So for this, I like where it is. We've had a relatively healthy corrective coming back here, pushed through this zone, broken structure, and now we've had a pull back to that 20. Could we have a few days here of a little bit more accumulation? You got to think about that 70-30 rule, right? So markets trend 30% of the time, markets range a pullback 70% of the time. So if you have movements, i.e., okay, where's probably not a great example here, but if you're getting a pullback of, say, let's say 7 days, you probably expect a 14-day accumulation pullback period, or an impulse of 7 days most of the time. So NASDAQ, from a daily perspective, I don't mind. From a 4-hour perspective, you're certainly looking at a break above this area. Once you get a break and close above here, with that 4-hour not being closed yet, I'd like that to the upside. But again, it's got to close above this area, because if it doesn't, then you would actually be a little bit worried about it. So this is why the reaction to the news is important. We got that initial spike, but how are we going to continue on? How are we going to, as I said, continue on from here? When you get bars like this, you're probably expecting a little bit of accumulation. If you get a bar like this, will this little bit of a wicked area, which is basically here, what do you think is up here? Retail. Are we going to reject it before the main moves happen? That's a possibility as well. So waiting for that close above NASDAQ would probably be my my bias, yeah. But just because it's moving down here doesn't mean I think it's going short at all. NASDAQ is not going high, not going to go higher. Look at NASDAQ market structure. But I presume you probably said that at different points, right? Maybe down here, it's not going to go higher. So, yeah, maybe. Ryan, how many, I thought the S&P moving hard to the upside on the news. Yeah, let's see. I still like it. Just because we're kind of coming off a little bit. Oh, God, on the MT4. Just because we're coming off a little bit. And are we even coming off a little bit? Think about where we've just hit. An area where you're probably expecting a little bit of resistance, right? So would it be nice to push through? Yeah, but I think ultimately it does. My bias is that it ultimately does. But if I'm wrong and we come down, then for me, I'm still it's a profitable trade, right? So, forecasting and analysis is all well and good, but ultimately as traders, we're here to make money at the end of the year. So, I could say, oh, I think EJ is going to do this, but it doesn't matter really, right? So if this gives me what I want and I get my retest and I go involved and I win it, then that matters. But if it doesn't, then it's being an analyst. I'm thinking being an analyst is relatively easy. Trading and being a trader is a whole different ballgame. Right, guys, unfortunately, I'm going to have to pop off here. I've got football later on. Ryan, how many confidence? I'll do that next time I come on, Trevin. I'm on every 2 weeks. So apologies for that. 57 profit take on the gold, selling off. Is it opportunity? Yeah. Right, yeah. Come back in 2 weeks' time, guys. I appreciate you joining. Remember to like the stream. And yeah, remember, everybody, trade safe. That's the most important thing. Trade safe, trade your plan, and you'll be all right. It's a long-term game at the end of the day. Right, guys. Cheers. Take care. Peace.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And if you're looking to get funded, check out Superfunded's examination today and get 10% off when you use the code A1 Trading. Click the link in the description below to find out more. From all of us at A1 Trading, have a great day, and we'll see you next time.